Hey, what's up, everybody? This is Brad, this is Rich, and this is Manhattan Real Estate for Sale. Now, Rich is here with me today because we're going to be breaking down a VA loan. But before we get started, I want to say thank you to Amanda and Butch at Butch's Boxing and MMA in Queens, New York. They were ranked the best boxing gym for 2019 in Queens, New York. They're letting us actually record this podcast in their basement at the boxing gym. So we're going to break down a VA loan. So let's just get right back into it. All right, everyone. So like I said, this is Rich, and the reason Rich is here today is for two reasons. The first is we're breaking down a VA loan. We're going to give you the highlights because the bottom line is not a lot of military people are aware about the benefits that you get from being able to use a VA loan. Rich just actually applied and was secured one, even though he hasn't executed yet. So we're going to give you that first person point of view. But the second reason Rich is here is because him and I are actually going to be doing a second podcast that is more of a scope dealing not just with real estate, but finance in general. It's called 3 to 1, and I'm going to pass it over to Rich to basically break it down what it is.
Right. So 3 to 1 financial tactics is our spin on the 3 to 1 ratio that military commanders try to achieve in offensive operations. So 3 to 1 essentially means we have 3 people to your 1 person. It's overwhelming odds on the enemy. It gives you the best chance of succeeding in whatever operation that you're planning. That is the tactical aspect of it, right? The finance aspect is personal finance. So we'll talk for everything from credit cards to investments to real estate. It's a very large umbrella, right? It's going to cover a lot of things. You got me here with a military background. I've done many tactical planning operations where I understand how to fit pieces together in a strategic way to achieve a desired end state. So between the two of us, I think you got a really good mix here to hit up a large population and talk about really important things.
Yeah, because obviously in Manhattan, I'm a real estate broker. I should say the state of New York, I'm a real estate broker. I also sell real estate in the state of Pennsylvania. And in addition to that, I've had different companies. I've sold different products that are just not real estate related. And obviously I'm a civilian like Rich was saying. So the whole idea is really to give two perspectives and then at the same time be able to deliver it to you all both in video form like we're doing here with Manhattan Real Estate for Sale and as well as through iTunes and Spotify and SoundCloud, basically all of the other spots that you can pick up podcast. So this way, if you don't have an opportunity to watch it, you can just simply listen to it. So going back to the VA loan, right? Let's just start off from the jump. Who qualifies for a VA loan?
Yeah, so you have to meet one or more of the following conditions. And Brad, I just want to say before we start too, being that I am still on active duty in the United States Army, anything we talk about in this show is my opinion only and obviously not endorsed by the government or the United States Army. But to continue, you have to meet one or more of the following conditions. So you either have to have served 90 consecutive days of active service during wartime, which is pretty easy if you enlisted in the past 20 years. You have served 181 days of active service during peacetime. You have served more than 6 years of service in the National Guard or Reserves. Now, if you did not serve those 6 years in the National Guard or Reserves, you've served, let's say, 2 years, but you were deployed for one of those years, you meet the first condition of serving 90 consecutive days of active service during wartime.
Got it.
Because you were activated.
Got it.
Just
so
as
it's
a caveat.
one of these.
It's one of these, right?
Yeah.
One or more of these, right? So if that was your situation, you just got 2. Lastly, if you are the spouse of a service member who has died in line of duty or as a result of a service-related disability, then you're also eligible for a VA loan.
Got it. Do you want to give a little bit of background as far as what you do in the military and also how now you're utilizing the VA program?
So my background is I'm a leader in the military. I'm currently a captain in the infantry branch of the United States Army. I was stationed at Fort Campbell before this, a couple other places, and I have two tours to Afghanistan with the 101st Airborne 3rd Brigade, Rakistan.
Thank you for your service.
Thanks, man. So I moved back on an assignment to work as an assistant professor in military science at a local university in New York, where I teach ROTC to cadets who want to become officers in the Army. So, so I have some more time. I'm privileged in the way that I have this position because a lot of guys in the military they're where I was a couple years ago, either in Afghanistan or in a line infantry unit where, they go to work when it's dark, they leave when it's darker. They live in the woods for a while. They don't got time to think about stuff like this. And nobody's informing them. So
I get your point. You're saying basically now that the smoke is kind of cleared, now you have an idea to kind of see, well, wow, this actually exists.
Yeah, but it's almost too late at that point. It's like I wish. This is why
I don't think so.
It's not too late, but
I hear what you're saying.
This is why I wanted to do this with you.
Yeah.
To hopefully we could reach some people who aren't at this point.
Sure.
Maybe they could benefit from this because maybe they are going to stay in 20 years.
Yeah.
And a lot of guys don't know about this. You know.
Yeah. So you're right now in the position that you already have applied and have been approved for a VA loan.
Yeah. So my boy Billy Stange over at Veterans United Home Loans. Stange, the Stange man. He approved me for a loan. Queens County limit here is $726,000.
And that changes for every different county that you live in, right? So like Kentucky, for example, is not going to be able to give you a loan for you're not going to be able to get a loan for $727,000 under the VA guidelines for Kentucky.
Well, yeah, I mean you could, but there's that down payment you have to make between the difference. So the general rule of thumb is $484,000 is the nationwide limit.
Okay.
Generally speaking, right? If you're in a crazy place like New York City, you're bumping up to 726.
Got it.
Now, you hit on that point that we just kind of talked about. If you want a $700,000 home in Kentucky, then you're going to pay a down payment on the difference between the loan limit and the purchase limit.
And what's the down payment?
So the down payment on a VA loan is zero.
Got it.
Yeah.
Now, what about the difference, though?
So the difference, if you have, let's say, $100,000 difference in what the loan limit is to what the purchase price is, then you're looking at a 25% down payment on the difference.
On the $100,000.
Yeah, so say it's a $100,000 difference, 25% on the $100,000.
But as long as you stay within that county limit, then it's no down payment at all.
Good, zero.
Wow, that's really nice.
Except for closing costs.
Sure. Before we even get into the closing costs, just to finish that up on your end. So now you're approved for a VA loan. Do you have any idea as far as what you're going to do? Is there a house that you've lined up, or is there anything?
Yeah, so I lined up my old house, my parents' house, where I grew up. So, I mean, I figure it's the perfect place to live. I know who's lived in it. I know the things that are wrong with it. I fixed a lot of the things that were wrong with it. So it's like, hey, I trust the people who are selling it, and you know, we could work out a good deal. And so I'm looking to purchase their house. So right now, the loan is just on hold, and they're not going to do anything with it until I'm ready to execute it.
Got it. Understood. All right. So now that's your personal situation, and we're going to jump over now into the guidelines, so to speak, of the VA loan itself. So no down payment. Now, debt to income ratio has to be 41 to 45%.
That's the sweet spot, right? Like sweet spot's between 41 and 45. It can deviate from that, but you'll have to have some compensating factors and good credit.
Got it.
If you are deviating from that, which they'll take into account.
Got it. What is the biggest difference in terms of the VA loan compared to the FHA or conventional loan?
The zero down payment.
You also don't have any PMI, no mortgage insurance at all.
No mortgage insurance.
So that's huge. So no down payment, you have no PMI. Now, as far as getting a VA loan, it has to be your primary residence, correct?
Yeah, that has to be your primary residence, bottom line. What you can do here is you can use that VA loan for an investment in the property that you live in. So you can purchase anywhere from a 1 to 4 family property.
Okay.
As long as your primary residence is one of those units in the property, boom, you're renting out the other 3. You're making your mortgage
so you got
payments.
Some investment opportunities.
Absolutely.
If the numbers line up.
If they line up, you can definitely.
It's a tough nut to crack in New York, but I'm sure there's parts of the country that actually you could take advantage of capping out of the VA loan, and then at the same time living in one of the 4 units, renting out the 3, and now all of a sudden you got some cash flow.
And there's a lot of up and coming places like Austin, Texas. If you're stationed at Fort Hood,
Raleigh, North Carolina.
Exactly.
I don't know. Is there any military bases near Raleigh?
So Fort Bragg is not far. So but it depends. Like so Nashville. Like I just know because I was stationed at Fort Campbell.
Yeah.
Nashville is about a 45-minute drive, depending on how fast you drive on 24. When I was there 5 years ago, like that was up and coming.
Sure.
I wish I had invested then.
Sure,
and
exactly.
Money for the VA loan goes a lot further in a place like that than it's going to go in New York.
Yeah, and you know what? Over that 5-year period, two things are also happening. One, you're paying a mortgage. So you're putting equity into the property. And then two, you have the potential for capital appreciation. So let's say that outside of the money that you're putting into the mortgage, you also have the area go up in value. Now, all of a sudden, you have an appreciating asset. The other side of the coin on that, too, is because you are in the military, you have access to people who are basically potential customers.
Yeah.
Because not everybody is going to utilize a VA loan for whatever reason. So why don't they just rent out of yours?
Everything in the life and the military are the same as connections. So,
Yep.
hey, I got a friend, he's moving to my duty station. Well, hey, I bought this house with my
Sure.
VA loan, and I have a friend who has a house in Kentucky. Well, now I'm getting stationed in Kentucky. Let me hit him up.
Sure.
Boom. Now I have a house I'm paying to a friend, and
Sure.
we're helping each other out.
Well, with social media today, too, I feel like that's much more possible as well.
Yeah. You could be a stranger, but
Yeah.
you got that connection. It's like,
Yeah.
hey, I'll take care of you, brother.
Sure.
For the most part, it is like that.
So if you bought a property and then you find out that in 3 years you have to go to a different state on the other side of the country, can you buy another property in that other, that second place?
No, yeah. You could have 2 VA loans open at once. You have that second tier entitlement is what it's called. And say you used $250,000 out of the $484,000, which is the limit for where you're at, generally speaking. But you're getting moved from Texas to New York, let's just say. You're getting moved to New York. Well, over here the limit is $726,000. So now you got some wiggle room. Like, hey, I only exercised $250,000 of that. So I should have, let's just say, give or take $500,000 left to play with. Now, that ain't going to be enough for a house here, but it'll be enough to get you something here.
Sure.
And if you have to go above,
bedroom co-op,
right?
You could get
you could get something.
Yeah, you could definitely get a room.
And then hey, you figure out how to sell that other property or keep it as an investment property afterwards. You figure that piece out, but you get the leeway as long as, like we said earlier, you have the credit score or compensating factors to support that, because now you have 2 mortgages open.
And those mortgages have to become, so when you do your debt to income ratio, you're going to have those 2 mortgage payments plus any other additional liabilities that are coming from property A and property B, and they're going to be matched up against your gross monthly income.
Yeah.
So all of that can't be more than 45% of your gross monthly income.
Yeah, and something else too that I want to mention is because we went over the categories of who this applies to. So some of those people that this applies to are no longer on active service in the military. Like they're no longer actively serving in whatever capacity they were.
Yep.
So that'll be me in about a year.
Yep.
So once you get to that point, the whole PCS notion, permanent change of station notion, doesn't really apply anymore, right?
Sure.
As that term, but actually it does in a way that, hey, so you got to relocate for work, like they got you covered.
And the other thing I like about the VA loan, which is really cool, is the fact that let's say that you do get a loan in Tennessee, and let's say that you, for whatever reason, you pay that loan off. Now you could actually get a VA loan on a second property.
Absolutely.
So it's a continual process, provided that you pay the loan back and there's no prepayment penalty.
Yeah, and that's like a huge overarching theme that when I spoke with Billy Stange, he definitely wanted me to mention, was that like he runs into so many people who he said, he spoke to like some 78-year-old men who were like, I didn't know I could use it twice. I didn't know you could use it twice until recently.
You didn't even know you could use it
once.
once.
I didn't even know I could use it once.
Now you found out that you could use it as many times as you want,
Exactly.
as long as you pay off the principal.
Right, and I didn't even know what county limits were. I was under the impression that no, I'm never going to be able to buy a home in New York because the VA loan is too low. Not the case, right?
Yeah.
Also, the second time thing. I have had so many guys in the military, tell me, hey, no, you can't use it twice. You can only use it once, man. These are guys who have gotten it too.
Yeah, well, that's the idea of the podcast, right? So before we wrap this up, I just want to mention one other thing is with the VA loan, you can actually get a 6% seller's commission, and a lot of veterans will use that 6% towards the closing costs.
Yeah, because you can't forget, like we mentioned earlier, there are costs associated with a VA loan, and so that's a great way to kind of dampen the amount that you have to pay for closing costs.
Basically now you're really minimizing how much you got to come to the table.
To make it as close to zero as possible.
Yeah. If you have the debt to income ratio to justify it, and you could fall underneath those county lines, I can tell you right now, if you're a veteran, that is the loan that you want to go for.
Absolutely.
If you qualify, that's it. It's as simple as that. That is the loan that you want to go for. So I think this was great. We hit everything that we wanted to hit.
Yep.
Thank you for being on my podcast, and I'm looking forward to starting our 3-to-1 financial tactics podcast, which this is going to be on as well. So this is actually going to be part one of that, and it's a little bit of a mishmash between the two because I thought it was a perfect segue into that. So why don't you give everybody an idea of what to expect from the 3-to-1 Financial Tactics podcast, and then we'll just call it a day.
What you should expect is you should expect that we want to make it interesting and reach down and touch everybody and say, hey, like there's some stuff out there you don't know. We'll give it to you in a digestible format, and everybody will come away knowing something they didn't know before.
All right. Well, anyway, let me wrap this up. Thank you, everybody, for coming back, checking Manhattan Real Estate for Sale out. Don't forget the 3-to-1 Financial Tactics podcast. And also, remember, every week we're going to be doing the 3-to-1 Financial Tactics. Obviously, I'm still going to be coming out with the Manhattan Real Estate for Sale podcast. So until we talk to you all next time, have a wonderful week, and we will speak then.
Out here.